Welcome back to the second edition of the Revere Weekend Walkthrough hosted by myself and Ted. Hope you guys are having a good weekend, and we're excited to dive into the markets and show you guys what we're seeing for the week ahead.
Yeah, welcome back. We like the feedback was great. We're gonna try to keep this shorter and sweeter and provide some more actionable and practical items versus just going over like what happened last week. But before we do that, we're just gonna still give a brief recap of last week. So once again, how we always start the video, we're gonna go over the trend gauge. So the market leaders we currently have at neutral, and we have the green arrow because we're starting to see some pretty positive developments in many liquid leading stocks and in a whole breadth of sectors as well, which Connor will go over later. The short-term trend at neutral, but we have a green arrow to head to the uptrend because we are above the 21 EMA now, but we do want to see that start to slope up and have that 8 and 21 or just any shorter term moving average combination in uptrends together and bullishly aligned. Medium, we still have the arrow at red, but with the yellow arrow to go to neutral because we did close under the 50-day, but we're just right about there. And then long term, still the same with the green arrow as the uptrend is still continuing above the 200-day simple moving average. So I'll pull up an S&P 500 chart. The biggest developments or biggest piece of news in the last week was FOMC, and they held rates as expected at 5.5%. The Fed, like months before, just continued to reiterate that they want to see inflation to come down more. So that is definitely the dominant fundamental driving factor of this market: inflation, labor market, and just the Fed's interest rate policies. What boosted this market and kind of held it up? We had Tesla earnings, which reacted really well, and then also Apple, which they launched the biggest share buyback in their history, and that really boosted Apple and the markets as well. So the S&P, we we closed above that all-time high anchored VWAP, and that was the first close above um, since the top actually. So that's definitely a change in character, but we did slightly close below the 50-day, which is why we had that medium term still in a downtrend, but we are almost back above. Just one worrying sign is that even though we are starting to see us reclaim some key levels on the daily chart, at least we still have the volume patterns are still dominated by distribution. But on the weekly, we are seeing some better action. So I think we're definitely in a pivotal area. For bulls, we want to see us continue higher and see all those moving averages bullishly align. For bears, you don't want to see this get above the 50-day or especially close above. S&P equal weight, we are weaker, so that still shows breadth might not fully be there. So we want to see more and more stocks participate for us to gain conviction that we are back in a healthy uptrend. QQQ, also changing character, closing above the all-time high anchored VWAP and the year-to-date anchored VWAP, but rejected the 50-day. We do want to see us retake that as well. But like what I addressed last week, it was crucial for us to see where the markets would go if we were to take out the highs of this inside week or break down below the lows. So it's a good first start that we're taking out the highs. Quickly, QQQE a bit weaker, which just shows the mega caps are still more in favor than the smaller, lesser market cap stocks. Mid caps, huge gap up in the face of those job numbers that came in weaker than expected. And this current market narrative, weaker labor market is better because it gives the Fed just more of a reason to cut rates. Traditionally, a weaker labor market is terrible for the markets because then the markets start forecasting a recession, but that is not the narrative right now. Small caps, same deal. Mid caps, huge gap up on those weaker labor market numbers. We did close below the 50-day. Dow, not much to talk about, gapped up as well, closed below the 50-day. VIX, this is, as trend followers, we love to see this. So we had this huge spike, and now we're all the way back down to into that 13 to 14 area, which means volatility has died down. And for us trend followers, volatility is the plague, so it's nice to see volatility come back down. These relationships we can skip. Dollar on those weaker labor market numbers, job numbers, we broke down out of this flag, but did find support at the 50-day. We want to see this continue to chop or just slowly drift lower. A strong dollar is never good for equities. Gold is still holding up in there. This weekly just looks fantastic. Huge volume on the up weeks, and then a slow drift back to the 10-week. Hasn't even reached it yet. So this is still looking good. Silver had a successful weekly base retest on this blue line. Copper is just a monster, continues to trend and just been in the lockout rally, as Connor pointed out in the future. Crude, it is nice. It is really nice to see crude below all key moving averages. That could be a sign that inflation might start easing a little bit or just pulling back a little bit. Rates, just like the dollar, broke down. That was the 1 year. Here's the 2 year, 10-year, 30-year. So we want to see rates continue to retreat and pull back, and that would act as a tailwind for equities. So since rates dropped, bonds obviously caught a bid since they have an inverse relationship. It's nice to see high yield and junk bonds reclaim key moving averages on some pretty big notable volume on the week. And just finally, Bitcoin. Been talking about this for weeks now. I mean, this weekly is starting to really become quite nice. We undercut the base, found support near the 20-week simple moving average, and reclaimed that base. It just made sense that after this 200% move into all-time highs, Bitcoin needed to pull back a bit, and now just sitting right near the previous all-time highs. We had an undercut and reversal of the 60K level, reclaiming the 10 and 20, and the 50-day starting to flatten. So just want to continue to see this start reclaiming some more levels, chop around, and go for the highs again. ETH doesn't look that great, and Solana is just basing as well. Continue on. So that was just a breakdown of the general markets. Our expectation right now, we're pretty neutral, 50-50. If we're going to take out the upside, definitely look for leaders to get some exposure in. And I would say that, and I think Connor would agree with me, that right now it's a great time to focus on the setups and the themes, especially since the indexes are back above the 10 and 20.
Yeah, and just to touch in with that is, I think if the market's challenging or it's not as strong, people, may get a little bit more lazy with their process and not screen as much. But this is precisely the time when you should be putting a lot of effort into screening, because that will give you an edge to catch stocks that are making the turn and like what stocks are standing out and showing relative strength. Because we love that analogy, beach balls underwater. And if you look back at group moves like last year, cybersecurity, that was acting like beach balls underwater. And once the market bottomed, that exploded higher. So that's just quick rant.
And just quick little thing. The Nasdaq Composite actually closed above all moving averages, but it missed the fall through day by like 130 something thousand shares. So we didn't get a follow through day, but it was close. We'd like to see this RS line retake these moving averages as well. So just quickly, breath. Again, this per deep market monitor, we're back in the green figures. So what this simple filter tells me in my head, at least, is just start looking for breakout and seeing if they start following through. So that is what kind of our minds are headed into this week. Look for strength and see if they follow through and work. That's our primary indicator. Quick little breakdown of net highs, pretty much on every single time frame overall in bar charts, components, New York Stock Exchange and Nasdaq saw net highs across the board. Just to have a better visual, I have stock charts here, as you can see, net highs in the NYSE, and then net highs back in the Nasdaq. So that's a really good sign to see. And as you can see, during this pullback, we dipped into net lows territory, and the Nasdaq's back in the net highs. Quickly, NYSE and NASI, we started turning up, broke above the 10-day moving average, MACD bullish cross, and the RSI's hooking back and looking to break back into the neutral territory. So perhaps we can get a run up into the oversold areas, overbought areas again. NASI a little bit stronger. We are in neutral territory in the RSI now. The NASI has followed through more above the 10-day simple moving average, which is hooking up, and same with the MACDs in positive territory. What the NAMO shows, though, we had explosive move off the lows, and we're kind of in the overbought territory. So maybe this has to chop back down to that zero range, and that would really give it the indexes some room to digest the pretty big gap up on Friday, and maybe even give some stocks a chance to tighten up even more and build out their right sides and provide some more symmetrical bases.
Yeah,
CNN fear. Oh,
just saying like a higher low there above the zero
mhm,
would show strength.
right. CNN fear greed. This is what we really like to see how we reclaim a lot of key levels, but we're still in the fear territory. And this just gives more upside potential if stocks do start coming out and setting up because people eventually start chasing. And then NAM, even though we had this pretty decent rally, barely hooked up from this pullback that we had. So just shows that money managers and people in general are still very cautious of this market. So if we do turn up, there's still some decent upside. Quickly, just rates. We were expecting a rate cut in May, and that went to 0% chance. In June, it's pretty much 0% chance, like 8% chance. July, still favoring no rate cut, and then September is where the Fed swaps start pricing in a rate cut. So we'll definitely see what happens. But again, it's it's inflation numbers, labor market data, and then and then it's up to what the Fed thinks about that data and what they're going to do. Um, Connor, I'm going to send it over to you for sectors and earnings. I'm going to
Yep.
stop my screen now.
Okay. One sec. Need to share this. There we go. All right, so I got Market Smith Market Surge pulled up here and wanted to just go through some sectors and some stocks in those areas that I think are in play and showing relative strength. So so utilities are going to be the first one. Not the most sexy sector, but this is acting really strong. You can see it got back above the 200-day moving average and it's breaking out of this stage one base. And some of the stocks in this group that I'm focused on is SO, looks similar to XLU, VST. I mean, this stock has just been a monster. You see it had all the ants characteristics, undercut and reclaim the 21 day, and it's off to the races. And it's up another 4% after hours on being added to the S&P 500. And then lastly, CEG, beautiful looking chart on this name. They've got earnings in 4 days, but after that gap up right here, it's built higher lows this whole way, and it's breaking out of this flag into earnings. So this is the weekly great looking chart, so that will be key. And then another sector is solar, actually. So if you look at this weekly, I mean, you see this, it's been in a downtrend, that's for sure, but it broke below and it reclaimed. And sometimes the undercut and reclaim setup can be really good at catching turning points in stocks, sectors, groups. And it reclaimed back through this 40 level, which is a positive sign. And what really got me looking into this sector is First Solar. This is showing beach ball underwater characteristics to me. It's not the cleanest base on base, but look, right, it broke out of this base through the 200-day, and it's breaking out of this newly base again. And it reported earnings last week. Those are out of the way, and look at these numbers. I mean, the earnings sales increase is really fantastic, and that's awesome to see. And when you look at the weekly, looks really good. I mean, it obviously corrected and has been showing underperformance, but
Look at that earnings line too, Connor. Go back to the weekly, just
yeah,
accelerating. And and a lot of times when stocks start pulling back and correcting, they're still growing their earnings. And that's just great because when the markets do catch on, that's when huge multiple expansions can happen.
yeah. And yeah, every sector stock goes through periods of underperformance. And clearly solar are rate sensitive stocks, and rates have been
Hmm.
elevated, and that's been negatively.
Also, Connor, you want to draw that downtrend line on the RS line? You can see
Yeah,
there's that change of character as well.
yeah,
Yeah, so
exactly.
yeah,
And the
definitely
stocks
so.
tell us this, and we've noted the outperformance relative strength in First Solar recently. So that's good to see.
Yeah.
And Just other stocks in the sector, really not good. First Solar is your top merchandise, and that's what we want to focus on. And then I talked about China last on Friday, actually, on the show. I mean, huge stage one base
Oh
break,
yeah.
and the names that we're focused on in this group is uh, Futu. This is a leader, broke out of this huge base. If you The weekly looks fantastic. I mean, this had VCP characteristics. Let me use a temporary. First contraction, second contraction, and look how tight this contraction got. And it's breaking out. And the other China name is PDD. Again, strong gap up, pocket pivot last week, held those gains. So this is the leader in China, in my opinion. So this is the
Look
one
at
to
that
watch.
earnings line too.
Yep, earnings line's fantastic. And then one thing I haven't mentioned I want to talk about is ONLN. So this is the online retail ETF, and
Oh yeah.
this is breaking out of a fantastic stage one base, and it's been showing relative strength. We go to the daily here. I mean, it's breaking out into 52-week highs. And what so I saw this got my attention, and then I looked at the holdings, and it's got Amazon's a top weight. This is one of the leading Mag 7 names, and it's on the verge of breaking out here. PDD, which I just mentioned, that's in this group. William and Sonoma, this is in this ETF, it's home furnishing, but this showed ants characteristics, gapped up on earnings, and you turned off the 50-day. That looks great. And then CPNG, another new merchandise stock that's showing fantastic strength. They've got earnings in 2 days, so that will be one I'm watching closely into the print. And then, I like the numbers on this one, and the weekly looks similar. I mean, confluence of a lot of things. Big stage one base broke this huge downtrend line, RS line confirming. So names to watch. And then another group, restaurants, which I continue to mention. Kava, one of the leaders in the group, looks to be breaking out from this IPO cup and handle look. Looks good through these highs. Sweet Green's another name, undercut and reclaimed to the 50-day, and then Chipotle, Wingstop, Texas Roadhouse, all fantastic charts in this group. And then another notable theme I've been seeing is keep an eye on these duration stocks and rate sensitive sectors. Solar's one that had that UNR, and then regional banks. This is uh this is trying to break out from this downtrend line, and we've seen some favorable earnings reports from some of the regional banks. And like this RS line's got, a clear downtrend line break that it's trying to come through. And the weekly looks pretty good. I mean, this was the initial move off the bottom. Now it's pulling back, forming a weekly flag. So that's another rate sensitive sector. If rates come down, these tend to outperform. Ted mentioned as well, like IWM. This is another one. And then last one is XBI. This showed some life last week, gapped up into this 50-day and rejected, but really this 94 level, this previous high is what I'm watching for confirmation of the upside in biotech. And then on the weekly, I mean, it's still carving out this stage one base, and a prime characteristic of stage one basing is frustration, right? Failed breakout, failed breakout, failed breakout. Oh, this looked like it was it. Back into the range, and now coming back against the high end of the range. So keeping this one on watch still. And then, yeah, so those are some of the main sectors that I'm watching. I always like to see group strength in any stocks that I'm trading, and that's kind of how I do my analysis. So I've got about 13 stocks that are on my watch list for this week. So we'll run through them real quick. AppLovin, this has been a beast since this first gap, and its reports in 3 days. So I'm going to watch this on the earnings report. It had a favorable post-earnings drift after this one, and fantastic numbers you can see down here. Cart, new merchandise name that I'm watching, earnings in 3 days as well, undercut and reclaimed to the 50-day and had tons of ants characteristics right here. Kava, like I mentioned, the leader in the restaurants, top focus. CEG, mentioned that. CPNG as well. Carrier Global, let's go to the monthly chart. I mean, this is a picture perfect monthly chart. Huge move up, first pullback, and now this has got a cup and handle look. And I mean, it's breaking out from here into all-time highs. The weekly just I mean, this base is beautiful, and then daily as well. And they just had earnings the other week, positive reaction, so that's a top focus. FCX copper is one of the strongest industry groups right now, and this is the leader in the group forming a bull pennant here after this move up. First Solar mentioned, IBIT. Ted covered Bitcoin really quick, but um, everyone thought this was breaking down and then it's ripped right back up. So watching for further upside strength in that one. Nvidia, can't keep your eye off the leader of the market, back above the 50-day, and it's really carving out a pretty nice base. Weekly still looks constructive, and earnings in 17 days. Pure Storage, this had that monster gap up on earnings, and after that it hasn't really been doing a whole lot, just consolidating in the space. It never undercut that earnings gap low, and if we look at the weekly, I mean, it's a great looking chart, and that has held up relatively well. VKTX, some eyes on this one. This is, a biotech leader in the GLP-1, but this is set this, it pulled back first, second, and this third final contraction has been on light volume and much smaller than these previous two. And then coin, if Bitcoin wants to confirm higher, this will be the top focus. It didn't have the best reaction on earnings. It rejected the 50-day, but I mean, look at these earnings numbers. That's very bullish, and weekly chart is still looking really good. So yeah, so those are 13 charts that we're watching heading into the week, along with some sectors that we think are showing strength. And then if we just look at earnings real quick, another busy week. Earnings reactions have been very mixed so far. I mean, TMDX is one of the highlights. Ted talked about it on the podcast. That's acted really good. But other than that, it's been very mixed. So just gonna watch these names and see if we can get a better trend from these names. And Robinhood's one I'll be watching, Airbnb, Uber, Shopify. So another jam-packed week. And yeah, Ted, that's what I
Alrighty.
got for stocks and earnings.
Yep. I'll take it over and quickly do some economic calendar review. But actually, before I do that, Connor talked about China, right? I have the Hang Seng Futures Index pulled up, and we saw just a true change in character, 9 days up in a row. I just wanted to show this stat that I saw on Twitter, and it said the Hang Seng Index is now up 9 days in a row. Last time this happened was January 2018, and here are some average gains afterwards. And so it's pretty notable that China is making the move that it is making, and we definitely have our eyes um, on that group or theme. So apart from that, I'm not going to go over this list, but Don has us creating the 21 over 21 list again, which is 21 stocks over the 21 EMA. That, in our opinion, is showing the strongest action. Right now, I have 26 stocks because I haven't narrowed it down yet. But if you want to just take a second, you can screenshot this if you would like. Many of these names Connor covered as well, but some of these are some of the stronger names in the markets that we have an eye on. So I'll just give it 1 second so you can screenshot. And then I'll go on to economic calendar. Last week was packed. This week, we don't have that much. We just have some Fed speakers here or there on various days. I guess initial jobless claims on Thursday, and then preliminary consumer sentiment. So not too much in the economic calendar or data for this week. Connor, do you have anything else? I think we are wrapping it up here. If you don't have anything else, Connor.
Nope, I don't. I
Okay.
think, yeah, that's all I
Okay.
got.
So yeah, hope you enjoyed. Again, we'll be doing this every week. This was a fun, this was a nice time doing this. Some more exciting action versus last week. So it just shows that the action can really change quickly. And you must be always ready and just following the markets and getting a sense of where the money is flowing into and out of. So if you're interested in either of what Connor and I do, or have any questions, you can reach out to us on our Twitters, which is right here, and then our emails, which is right here. Or if you're even interested in being a client, you can reach out to us as well. Any last words, Connor?
Nope.
All
Wrap
right.
it up.
Yeah, wrap it up. So we'll see you guys next week. Hope you enjoyed.